What's going on, everybody? It's Wesley Krombel bringing you another episode of Real Estate with Wes, episode 20. On this very special edition, I'm speaking with mortgage lender Nate Pryzbek, and we're going to discuss everything lending from interest rates, pre-approval, and everything in between. Let's get right into it. Welcome, Nate Pryzbek from Fairway Independent Mortgage Corporation. Nate, I am so happy you're on the show, man. Tell me a little bit about yourself, what you do, and why you love doing it.
Yeah, I am Nate at Fairway Mortgage. We do mortgages, residential, 1 to 4 units. I guess I specialize in first-time home buyers, but literally helping anyone who owns a home, who rents and wants to own a home. I have a background in coaching football, so my whole take on it is if you can't be pre-approved right now, let's come up with a plan to get you pre-approved, and we'll go through those steps together, and I'll be with you along the way.
Awesome. So I want to start off right away with the interest rates, because I know that's been a big topic of discussion just over the past year. We know that the rates, for those who don't know, the rates have been historically low. Like they've never been this low before. Can you kind of just give us a quick synopsis of like how crazy low they actually are?
Yeah, absolutely. And that's a topic of discussion. It's kind of like New England's weather. So every 5 minutes, it's something new.
Yep.
So when COVID started almost like a year ago, rates dropped dramatically, the fastest they've ever gone. Like there's usually a few $1 trillion worth of mortgage business each year. And I think there was like 1 trillion in that first couple of weeks. So it smacked. Everyone was delayed with appraisals. Huge influx of refinances that were taking months for some banks. But we remained like a purchase focused company. So rates got super low and then they kind of pulled back up a little bit. So ever since kind of the election and the Georgia runoff over there on January 6th, rates have been steady, but yeah, since January, they've been going up. So February, I just read the other day, it's the first time in the last 2 decades where interest rates rose 0.5%. But just to keep things in perspective, they're still historically low.
That's what's crazy about this is we had such low interest rates. Do you think that's mainly because COVID happened and they tried to offset how slow things might get in the market? Was it just freak timing as to why they were that low? Like what kind of came and caused this perfect storm of really high demand from the low interest rates for buyers, but the low inventory, so there's no supply for homes being sold?
Yeah, it's literally like a perfect storm, I think. So when the economy is strong, interest rates are high. And then when the economy is like everyone's getting furloughed or there's a lot of uncertainty with what's going on and is this going to close for how long? Interest rates drop to make up for that. So it's a strange time and it's all unprecedented. And we do our best to kind of set expectations, especially with locking your interest rate when you find a home.
Okay. So something I want to get out of the way, I feel like I have people that contact me all the time and they're like, I want to go and buy a house. What do I do? And where do I start? And obviously the first thing you want to do is you want to speak to Nate in order to get pre-approved and find out what you can actually buy, because that's like that golden ticket. When you go to buy a house, you need the proof that you can buy it.
That's
So
right.
the misconception that I want to clear up is I know a lot of people get nervous with talking to lenders for 2 reasons. They feel like they're committing because they feel like maybe they have to owe the lender something, or they may feel like, ooh, I don't want my credit run yet. I don't want to get my credit messed up. Where that kind of can help buyers who are looking to buy for the first time.
Yeah, absolutely. So a lot of loan officers, I know some banks are different, but we only get paid when you close a loan. So there's no cost involved to have a conversation. And like I was saying, I have a background in coaching football. So that's my biggest key is to connect with people and educate them. So if someone comes to me and they say, I don't want my credit pulled, I just ask why. If your credit's not in a great spot, if you're not above a 740, which is like the top tier for the interest rates,
Mhm.
then let's see how we could get you there. We have awesome tools that I actually just had someone the other day, like their credit was borderline qualifying. I'm like, you have a $500 credit card and it's maxed out. If you pay that down a little bit, your score is going to jump up 30 points. So just educating, because there's so many times where people will just have like a collection and one credit card and they think it's good to pay off the collection, but that removes half their trade line history and it hurts them. So
Right.
just educating is huge. And then finding out what they're comfortable with, because when I got to Fairway, there's so many good loan officers here too that I just absorbed everything. Yeah.
So you were awesome in providing these graphs for me. I am looking at them here now. So this one looks to be interest rates over the past roughly 40 to 50 years here. Just kind of explain once again how crazy this is historically, and really where do you see rates going maybe for the rest of the year?
Yeah, so yeah, it's crazy since interest rates were a thing. You could just see the timeline of how it got so high and then just slowly
Mm.
down. And of course there's ebbs and flows, there's waves, dips, and but where we're at all the way at the end, like there's a lot of panic. Oh, rates are going up, rates are going up. But in the grand scheme of things, they're still very,
As
very
low as it
low.
ever, yeah.
But yeah, I've been jumping on a bunch of calls. Our company, there's at least weekly calls with some of the experts that are forecasting where rates are going over the next year, 2 years, 3 years.
Mhm.
And I mean, they're trending up. There's volatile days and weeks for sure.
Yeah.
But as the economy comes back and as the vaccines come out and things start opening again, we might, yes, see them in the mid to high threes in the next year or two.
So, speaking with interest rates, this to me is why interest rates are so important. And another great graph that you shared with me here. Just explain how this plays out. This really is just the difference in interest rates. So, if everything else was the same in terms of your purchase price, this is how big and drastic of a difference it could be.
Yeah, absolutely. So I did a purchase price of 250,000,
Mhm.
conventional first time home buyer. I put 3% down and just the principal and interest. You could see from the 3% interest rate to the 4% interest rate is $135 difference each month. So the principal is probably here for the 3% and the interest is here. Now,
Okay.
as it goes 4%, 5%, it just, you could be paying, again, you're paying over 360 months, that 30 years. But over time, it really does add up. It's crazy.
And that leads me right into the other graph that you had also provided me, which I love these kind of graphs because it really helps you see how significant the change in interest rates can be.
Absolutely. And I'm a very visual person as well. So, yeah, like the 3% interest rate compared to the 5% interest rate, the average home buyer, first time home buyers in their home, 68 years. So I
Mhm.
put the 84 months, 7 months, saving $33,000 over 7 years is, it's a
Wow.
new car. So that's really incredible. And then over the 30 years below that, um, saving over $100,000 in just interest alone. So
That's
really puts things into
insane.
perspective. Yeah.
All right. Well, Nate, thank you very much. You guys got to check out Nate, his Instagram. I'm going to put his Instagram handle below. He does Wisdom Wednesdays, a lot of great information that I love. He also just